Hey, what's going on, everybody? My name is Matt, and welcome back to Crypto Kings. In today's video, we're going to be talking about some actions a whale took recently in Shiba Inu. This is insanely good news. And if you guys are new, make sure to drop a like, subscribe, and let's get right into it, folks. So, if you guys have not already seen this little bit of news, here's just some earlier today. And essentially, here, a crypto whale recently bought 20 trillion Shiba Inu tokens for $1.13 billion. That is absolutely mind-blowing. You guys can see on Etherscan, it showed a single transaction for 20 trillion Shib, which was on crypto.com as per the image here. And the impact of some massive decisions unclear, yada, yada, yada. And essentially, it really did not have that much of an impact, to be quite honest with you. I'm not noticing anything particularly massive on this chart. It's possible that this little surge could have been related to that. It's hard to really tell. I don't quite know what an impact of that would have. I mean, I would suppose that a $1 billion purchase would affect the market cap, of course, by $1 billion or so. That is hard to tell. I would say it probably had a very small impact on this graph here, which is definitely worth considering, perhaps somewhere around here, or maybe one of these other wicks of these other candles. It's hard to tell, but regardless, guys, definitely a very interesting decision, considering there have been a lot of whales out there, who've been investing several hundred million or $1 billion into Shib, and I think that definitely just accentuates how extremely decently Shib has been performing. I mean, all around, guys, this is some pretty good stuff. Before we get to that, speaking of good stuff, guys, make sure to check out Webull. Top of the link down below in the description if you guys want to get started trading crypto, stocks, all that good stuff. I would love to have you guys over there, over on Webull at the top of the link. If you guys use my link, of course, I will get a couple free stocks as well, and I always do appreciate that, folks. So when it comes down to it, guys, again, what we are looking at here is a very stable period of consolidation that, we've been talking about here for a long time. And when we set our areas of support here, right here around 53, it does seem to add up, because over the past couple of days, I've been unsure as to where this level of support would be. Would it be at 53, 55, maybe closer to 60? It looks as if the push towards 60, of course, was not something we could sustain, or even 57-ish as a line of support did seem to be a little bit too ambitious, it looks like. So right now, it would seem that our line of support, where we are stabilizing, is right around 53. And you guys can see there are a couple of historical points where we have bounced off of this same 53 line. Same thing over here, we bounced off of it. Here we bounced off of it. So there have been a lot of instances in which this 53 line has been used as a vehicle to bounce off of. Of course, this run here on the 5th was actually triggered by the breakthrough of this 53 line. So again, this kind of neckline here was broken through, and we were able to succeed in that. When it comes down to it, guys, I think that this overall motion kind of does still look like an inverse head and shoulders. And again, when we take a look at what this actually looks like, again, it's a head here, a little rounded. It doesn't have to be rounded. There are some instances in which it's not rounded, but a head here, it's a little bit rounder on the rounder side here, which you guys can see. This here is essentially the head. And then, of course, we have the shoulder and the other shoulder and the neckline. Same thing here. We have the shoulder and the other shoulder and the neckline. So shoulder here, shoulder not quite developed here. It's a little funkier here on the left. So again, it doesn't pertain exactly to what we are seeing here, but we have to round and use our sort of best information. Again, we use our best bits of info here as possible. Really, when it comes to these shoulders, there's a bit of a dip, and then the top of it towards the neckline. So you could say that this here is the little bit of the dip. Then, of course, the neckline could be something like this. So again, definitely not 100% pertaining towards this graph here, but it is close enough that I do feel like it is worth being considered. Because again, a lot of these movements, like I've talked about, guys, when you look at a chart like this and say, oh my goodness, what am I looking at? Like, it's not matching any of these. Unfortunately, it's not going to match all of these all of the time. There are a lot of times in which these charts will deviate, as is to be expected, and you have to do your best job at estimating what it looks closest to. Now, I'm seeing here from the 5th up until around the 9th, you guys can see it does look as if this could be some kind of falling wedge. Again, it's not exactly within the falling wedge, but it does look quite possible. It is a little soon to tell. But if this were to continue to sort of fit within the falling wedge, it would probably wind up somewhere around 52, 53, and then has the possibility to break out. That is a very possible scenario. There is another scenario here, of course, in which we could watch this just kind of consolidate somewhere between, say, 58, 59, and maybe a low of around 52, 53. So if we are to say that this is not a strict movement, but rather just a period of consolidation, and it's going to bounce in the bottom of the top, bottom top, bottom top, you could definitely make this assumption, and that would work out quite fine. So this is definitely another option for us to work with here. When we check the relative strength index, you guys can see it is showing that we're a little bit above where the middle would be, but still essentially at a break-even point. There isn't all that much going on here with the relative strength index, and a great way to tell this is to take a look at the volume. Sure, the volume is up over the past 24 hours, but not up enough to cause anything drastic with this relative strength index. And of course, the volume does look as if it is mostly buy. It definitely does lean towards buy volume, but there is almost an equal amount of sell volume. There's definitely enough sell volume to keep it from being overwhelmingly volatile. So again, that's really what it matters, guys, is trying to find how this sell volume and buy volume will prevent this from being volatile, and if it is going to be volatile, to be ready for it. So, again, we are a little bit above 50. Nothing particularly crazy there. Again, this increase here towards 4 billion is helpful in gearing some kind of bull run, but it definitely is not the be-all, end-all. When we check the Fibonacci retracement, which you guys can see on screen, it's going to, of course, map out everything we know about this most recent run. So it is showing us here the top and the bottom. We have the top right around 59 and the bottom here right around 54. And essentially, there isn't an awful lot of information this is showing, except for the fact that it does look as if the 23.6% line was passed and maintained. So it does look as if this line here we will be able to bounce above if we don't fall. So ideally, we could sit somewhere above this line here above, right around 55-ish. So that is definitely a possible scenario. Of course, we do have a bit of a backup layer here. We do have a backup layer of support right around 53-ish. So if it does fail and does have to bounce off the very bottom here, that may happen, and that is, completely understandable. But regardless, it does show that we were able to get past the 23.6% line. We are sort of questioning whether or not we are able to hold on the 38.2% line. Really, time will tell, but it is possible that we can see some candles that are able to sustain themselves a little bit above that line. So we definitely do have that option there. When we check the MA cross, you guys can see it is going to show us again exactly whether or not these crosses are considered bullish or bearish. Of course, when the red is on top, it's bullish, and then when the green is on top, it's bearish. So right now, they're looking right about the same. They're really neck and neck. So again, these moving averages are right about converging. So there's not an awful lot of info that it is giving us, except for the fact it's basically neutral. So with that being said, guys, thank you all so much for watching. I hope you all have enjoyed. If you guys did, make sure to drop a like and subscribe for more daily SHIB vids. Let me know down below in the comments, guys, where you see this going in the next few days. Again, I definitely do see an opportunity here for some kind of bullish momentum. I really, really do. So I am looking forward to that within the next couple of days. I feel like it's been hanging out in the high 50s, low 50s for long enough to warrant a breakout into the 60s again. So with that being said, guys, my name is Matt. Thank you guys so much for being here. Catch you guys on the next one. Peace.